Hi, myself Ramakant Patel. The current topic is buyback of securities. Buyback is a corporate action in which the company buyback its share and other specified security from the existing shareholder. Buyback of securities provided under Section 68 of the Companies Act 2013 and Rule 17 of the Companies Share Capital and Debenture Rule 2014. Subsection 1 provides about the source which can be utilized for doing the buyback. It provides that notwithstanding anything contained in this act, but subject to the provision of subsection 2 of the company may purchase its own share or other specified security out of its free reserve, its security premium account, or the proceeds of the issue of the share or other specified security. However, no buyback of any kind of share or other specified security shall be made out of the proceeds of an earlier issue of the same kind of the share or same kind of the specified securities. Subsection 2 provides the terms and conditions which require to be fulfilled to do the buyback. The company may purchase its own share or other specified security if the buyback is authorized by its article, if the buyback is 10% or less of the total paid up capital and free reserve of the company, then such buyback required to be approved by the board in the board meeting. If the buyback is 25% or less of the aggregate of the paid up capital and free reserve of the company, then such buyback is required to be approved by the special resolution at the general meeting of the company. However, if the buyback is of the equity share capital in any financial year, the reference to 25% in the above clause shall be construed with respect to its total paid up equity capital in that financial year. The Company Law Committee has clarified that the paid up equity capital includes the free reserve. So if we require to do the buyback of a equity capital, we should calculate the paid up equity capital and free reserve. Thank you. The ratio of the aggregate of secured and unsecured debt owned by the company after the buyback should not be more than twice of the paid up capital and free reserve. All the shares or other specified security for the buyback are fully paid up. The buyback of the shares or other specified security listed on any recognized stock exchange is in accordance with the regulation made by the SEBI in that behalf. The buyback is to be completed within 1 year from the date of approval, and no offer of buyback under this section shall be made within a period of 1 year reckoned from the date of closure of the proceeding offer of the buyback, if any. Now we can discuss about the taxation. Currently, the company required to deposit the tax of at the rate of 20% plus surcharge on the amount which is derived after the deduction of the price of the buyback reduced by the amount on which shares were allotted. If the shares are being bought back at Rs 100 and such share were allotted to the shareholder on rupees 10, then the company required to deposit 20% of 100 minus 10 of 90. We can discuss about the taxation on the buyback. Currently, the company required to deposit the tax at the rate of 20% plus surcharge on the amount which arrived by the price of the buyback reduced by the amount on which the share was allotted to the shareholder. So if the share are being allotted at rupees 10 and the buyback is being done at the rupees 100, so 100 minus 10 will be the consideration, the difference amount on which 20% will have to be the taxable amount. With effect from 1st October 2024, the buyback is taxable in the hands of the recipient as deemed dividend and hence taxed as in the hands of the shareholder. Currently, it is the tax being paid by the company, but from the 1st October 2024, it will be taxable in the hands of the shareholder. Now, the company will deduct the TDS on the amount paid or the difference amount paid at the rate of 10% in case of payment of the resident individual, provided the buyback proceeds are equal to the or exceed 5,000 rupees, and at the rate of 20% in case of payment of to the non-resident, subject to the treaty benefits. A question arises that whether the stamp duty is payable on the buyback. If we refer the FEMA provision, buyback is similar to the transfer of share from the person outside India to the person inside India, resident in India. And FCTRS and other compliances are required to be fulfilled as considering it is a transfer. But in case of a stamp duty payment, this is not considered as a transfer. Transfer of share attract the stamp duty via Schedule 1, Entry 62 of the Indian Stamp Act 1899. Since the stamp duty is payable on transfer of share, buyback cannot be equated with the transfer. In case of buyback, the share certificates are required to be extinguished within 7 days of the last date of the completion of the buyback. Further, there is no continuing person in which the shares are being continued, so there is no acquirer. So the stamp duty is not payable on this. I hope you may have liked the video. For more information, you can continue with us. Thank you very much.